Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the Zacks top stock picks video. Joining me today will be Nina Mishra. I'm featuring a bank stock, Wells Fargo in particular, but I like all the banks. The recent uptick, I would call it uptick, some call it spike, but the uptick in interest rates has really heightened interest in the space in general. And I tell all clients that if you don't have any banking exposure, you definitely should have some. And the primary reason for that is the very positive correlation that these stocks have with interest rates, which is a big negative for the traditionally high level of tech and growth stocks that most portfolios I see clients hold. So while tech stocks, as we are seeing in market action today, will lose their step and will be on the negative side in a rising rate environment. Banks will be beneficiaries of that trend. So you could play this favorable relationship with interest rates to any of the major banks, JP Morgan, Bank of America, or Wells Fargo that I'm pitching here. And the primary reason for that is that Wells, as you all know, was put in the doghouse 4 or 5 years ago after the unauthorized bank openings scandal came to light. The bank was under a very heightened regulatory scrutiny over the last many years, faced quite significant fines and penalties. The management team was changed. The current management team was brought in a little over a year ago. And I strongly feel that they have done an excellent job in cleaning up the operations and addressing the problems that were there in operations and controls and risk management, and putting this storied franchise back on track for the well-regarded position it always enjoyed in the industry. So performance-wise, the stock has done very well lately, as have all the other banks. It's currently trading at around 46 and change, just a hair below its 52-week high. But if you look a bit further back, it's about 15% below where it was in late 2019. If you go back a little further, relative to where it stood in early 2018, around February 2018, it's about a third below that stage. So there's a big performance gap relative to JP Morgan and Bank of America, which will get plugged and narrowed as the thesis that I shared with you, that the ship has been put on the right course by the current management team, is appreciated and accepted in the marketplace. I think this thesis has started playing out in the marketplace already. The last two quarterly releases, particularly the March 2021 quarter release in April, showed us that all the key metrics, revenues, net interest income, margins, returns on equity, balance sheet strength, all of those are moving in the right direction. And while we are not out of the woods yet, and a lot still need to be done, the management team is aware of that and have a plan for that. So while some of the easier gains in Wells stock have been made, and you could see that in the year-to-date outperformance that Wells has shown relative to JP Morgan or Bank of America, I think this momentum will continue over the next couple of years. And if you have the holding horizon to wait for this story to play out over the next 18 months to 2 years, you will come out ahead through a Wells holding versus one of the other banks. They're not bad. JP Morgan and Bank of America are very well-run companies, but Wells trades at a discount to both of those companies. The stock is currently trading at about 57% of the S&P 500 multiple, forward 12-month earnings. Historically, it has traded as high as 128%, as low as 38%, with a 5-year median of about 65%. So there's still plenty of gap that the stock could plug and narrow, which will be the outperformance for folks initiating a position in Wells at this stage. I feel that in the second half of the year, we will start seeing more momentum in loan portfolio growth, which should allow the Fed to let Wells return more capital to shareholders, which will be the near-term catalyst for re-rating the stock. But I'm not recommending Wells as a short-term trading or tactical idea, but rather as a long-term investment idea. With that, I'll pass it on to Nina, who has a very interesting pick with leverage to the commodities and the high-yield space.
Thanks, Shiraz. I'm Nina Mishra, and my top pick this week is Potlatch, which is a timber REIT. And we are talking about this company because lumber has been so hot. In fact, lumber is the hottest commodity in the US currently because lumber prices have more than tripled over the past year. So what happened is that when coronavirus-related shutdowns started, sawmills sent workers home and their production was curtailed. So by April, about 40% of North America's sawmill capacity was shut down. That is according to the Wall Street Journal. And when the economy reopened and people started migrating to suburbs, there was a lot of demand for housing, and people were stuck at home, so they started remodeling their homes, their yards. Restaurants started outdoor dining, so the demand for lumber skyrocketed, and sawmills took time to increase their production, so that is why the prices continued to rise. Now production is still 16% lower than the 2000 peak, and that is also according to the journal, and that is the last time when so many houses were being built. Now, demand for housing may remain strong, particularly because many companies have announced remote work policies, and there's a shortage of single-family homes in the US. And according to the National Association of Realtors, home builders will need to build between 1.1 million to 1.2 million homes to meet long-term demand. So that may keep lumber prices high. And while lumber prices have gone up, timber prices remain low. So landowners have not really benefited because there's so much wood in US South. So it is the sawmills, the forest product companies which are benefiting from this surge in lumber prices. And one of that companies is Potlatch, as I mentioned. It is a timber REIT. They own about 1.8 million acres of high-quality timberlands, and they also operate 6 sawmills. and a plywood mill, and all those businesses have benefited a lot and continue to benefit. Now let's take a look at this stock by going to the quote page on Zacks.com, and I wanted to show some charts to you. So you will see that it's a Zacks rank number 1, strong buy stock currently, with very good style scores too. A for growth, B for momentum, and although C for value because it has gone up a lot, but it still has A for the combined VGM score. And you will see that the industry rank is in the top 7% and the sector rank is in the top 6%. It also has a good dividend yield because it is a REIT. Now, if you go to the details estimates page, you will see that the company delivered a good surprise. Their quarterly results were much better than expected, and that is why analysts have been raising their estimates for the current year and the next year, which you can see have gone up significantly over the past few weeks. And I also wanted to show you an interesting investor presentation, which I found on the company's website. And this shows that a significant portion of their saw logs prices are indexed to lumber. So that is why the lumber division continues to do so well. And another slide which I wanted to show you is that they have been returning a lot of cash to shareholders. So 29% increase in dividend per share since 2012 and 116% increase in dividend payout since 2012. And housing may remain strong, so demand for lumber may remain elevated. So that is why this Zacks rank number 1 stock is worth a look. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos so that you do not miss anything. And we'll see you next week with 2 more interesting picks.